Good morning, everybody. It's Monday, July 26th. Just going to run through the morning charts here. Here we've got the Kitco overlay gold chart, and we can see that last week the previous low was set at 1185, or the last full trading session. Anyways, gold right now is drifting down to this point, and to me it seems like it's a pretty key support level. I'll show you here on the intraday chart why. If I pull up gold here, you can see this 60-minute chart. You can see gold has been stair-stepping its way lower here, and if we draw a simple support trend line on these steps, these bear flags more or less is what they are. Once you get a breakdown, then you get some follow-through selling here. Anyways, this is similar to what we're getting right now, and you can see the current price here is 1185.80. The support trend line is trading at is at the 1185 area. If we break that, we might see a nice drop down maybe to the 1165 area, which would act as a pretty good support point on when you go back to the daily chart. I'll just pull the daily chart up real quick so you can take a look. If we take a look here, you can see we've got this nice stair-stepping action down, and we've got 1, 2, 3, 4 waves. We could get one more washout wave, which could bring us right down into this support level off these previous pivot points here. So we might see one more flush down. It could actually have a larger spike depending on if we get some good panic selling. We might get a nice washout, and then from there we'll look for a possible long entry point. So we're just going to let that play out and go from there. As for the market internals for the SP 500, here's the NYSE advanced decline line, and you can see I've got the overbought and oversold market condition lines in here that I drew. In short, whenever the advanced decline line is up over the 2000 or 1750 2000 mark, the market is overbought, and we're usually looking for a pullback the next morning. And that's what we saw last week. We saw the market close way up here in the overbought condition. The next morning we saw the market have a quick pullback, and then it recuperated. But it just goes to show short term we're overbought, and there's most likely going to be a quick little pullback intraday as the market digests this recent strength here in the run up. It'll be just people taking some profits off the table. So right now we're trading at 1838, and it's in the overbought area. I would expect a little bit of weakness this morning, and then we'll see if the markets can pick back up and take another run higher. So if I pull up here's the daily chart of the SP 500 futures, and you can see I've got a couple moving averages. I got the 5-period moving average, which moves very closely to the price action. It's a pretty key moving average for institutions. Usually when you get a break of it, usually contains a move for quite a while, and institutions follow it quite a bit. So that's one thing I like to look for. And then we've got this purple line, which is the 50-day moving average and the 200-day moving average, and these are the most generic, most broadly watched moving averages, which is why they're important to keep an eye on. You can see the 50-period moving average act as resistance once it was broken. Resistance here again, and then we started to get some breaks above it, and the 200-day moving average was containing the price, and there was a little bit of consolidation here, and now we're seeing a run back up right to this 200-period moving average. It's also the 1100 mark, and 1100 mark is what a lot of technicians have been talking about is going to be a key resistance level, and it's a whole number as well, so it's going to act. There's a little cluster here of resistance points. Of course, if it's broken, we might actually see a pretty nice extended run up. Everybody's expecting the market to go down, and of course when you get a failed pattern, a failed move, it usually makes for the biggest moves in the other direction, because everybody will be getting out of the positions and jumping back in. So that's what I'm looking at right now. If we take a look at the intraday time frame here, and I zoom out a bit, you can see this was Friday's session here with all the big volume. So this is Friday's session right here, and then through the futures we saw prices actually run up over the 1100 mark, and it actually tested where the 200-day moving average is. We saw a pullback. We saw another little blip up there this morning, and now it's coming back down to the market value, which it pretty much closed at on Friday. So it's just a little bit lower. Friday closed at 10.99. Anyway, so it's trading right there. We might get a little gap lower. Who knows? Still have another hour to the open, so a lot can happen. But the market did go up, and it did penetrate that 1100 mark and up by the 200 moving average. So it's slowly eating away at that resistance, and we'll have to see what happens today. But because we are trading at resistance and we're overbought, we could get a pullback down into support level here, where it could pick up again and take another run at it. So that's what I see for markets this morning. U.S. dollar looks a little weak, but it's pretty deep into a support level. So I don't know how much is going to happen with the U.S. dollar this week. It could be a little choppy, but more or less in a sideways range. And oil is trading up near resistance, and it's just choppy as well. It's got a lot of different things that play into it. So that's it for this morning, and I'll talk to you guys in a bit. Bye bye.